Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's look at the medium-term picture. We invite our market master for the morning, Sindhu Samir, co-head institutional equity sales at Emkay Global Financial Services. Good morning, Sindhu. Thank you very much indeed for joining us. Markets at all-time highs is both a matter of cheer as well as a matter of worry whether we are entering at expensive levels. What is the thinking in MK? Are you all advising your investors to go out and buy even at these levels?
Of course, there cannot be a blanket advice to go and buy. It all depends upon the kind of investment horizon one is having, both at the institutional or the retail level. So if one is here to take a 2-year, 3-year kind of a call, it's still a great place to be in. Ultimately, one has to get to the basics. If one invests in equities to beat the long-term corrosive impact of inflation and wealth generation. So if one is ready to take this kind of a call where anybody is welcome to get into the markets for a 2-year, 3-year perspective, of course the low-hanging fruits are not there. Of course the valuations are not giving you a comfort. But at the same time, if one is ready to take a 2-3-year kind of a view, they are not in an outrageous band. So that is also one kind of a reality which the market is offering at the moment.
Okay, Sindhu, hi, good morning. But the problem has been at least at the index level, the market's not given dips. You have to at best buy in consolidation. Even when we were having that phase where the broader market was not performing, the index was doing fine because of the 5 or 6 stocks. But in the index, what are the pockets where you think that there's still value?
So, there is no doubting the fact that it was a narrow rally. So let's start from there. But if you just look at last 2 or 3 months, and specifically this result season, so that narrowness is getting broad. So you have a pharma participation taking place, you have a IT participation taking place. Prospectively, if rupee will be on a downward little spiral, then we'll have flip to IT also. So that narrowness, of course, it's not a broad-based rally, but it's not that narrow anymore. And that theme, if it continues, so we'll have another leg of index upward movement, powered by sectors like pharma and IT, which have not participated to a great extent as of now.
Okay, so pharma and IT. Sindhu, hi, good morning. You know, the last time when we spoke with you, you were here with us in our studio. You had indicated that private banks is a space that could move up significantly, especially corporate lenders. Since then, stocks like ICICI Bank have already rallied about 10% in the last 1 month. Do you see more value here, or do you see more of a rally here?
Again, the caveat is here that if you are in this space for a long term, and I'm not saying 20 years or 10 years, even for 2-3 years also, meaningful returns can be generated. So look at it. If there will be a value migration from PSU banks to private sector banks, that's one opportunity. These banks are not at a very high valuation, they are not at a lifetime valuation. So there is a reasonable intermix of value and growth out here. So if one needs to be patient, then definitely there are some reasonable returns to be made out here. Also, let's put things on a philosophical note. We are very happy to book a 3-year fixed deposit, 5-year fixed deposit, and never care to look at how much of interest we have logged in. But when you get into equities, one gets obsessive about the stock prices.
Okay, well, that's a fair point. That one is fixed. This one is not. So there is a temptation. But Sindhu, let's discuss the finance space, because it's now so many things. NBFCs, private sector banks, public sector banks, retail lenders, corporate lenders, insurers, wealth managers. What's your pick?
So let's not draw a binary out here that this is my pick. Let 100 flowers bloom. And if India, which was about 230 billion or 300 billion economy when the reforms started, today we are sitting at a 2.5 trillion kind of economy, and prospectively if it gets to a 4 trillion economy, I think majority of the sectors which you have named will be participating.
Sindhu.
Now, for a retail investor, now I'm coming down to a point.
Okay.
I think in terms of market capitalization, the breadth of the BFSI space, private banks offer a very robust mix of return capital protection, and all that stuff which are retail or institutional standard. So to answer your question specifically, at the vanguard of my picks will be private banks still. At the same time, I'm not drawing a binary that the other sectors like BFL, like NBFCs and others will not be offering. They'll also be offering values. So if given a choice, buy a basket of them.
Okay. I see that you among your top picks you have Tata Steel. Thoughts on the metal cycle, Sindhu, because the domestic stocks have corrected while globally prices are back to all-time highs.
So yes, metal space is a very, you can say now in an interlinked world, in a global world, it's a place which remains volatile. But again, I might be sounding repetitive. If the engine of growth, which is America, which keeps on powering, I think what kind of a big mistake can anyone make in retail if you are just here for next 3 years also.
Okay. I also notice in your top picks, or your top buys rather, you have names like Tata Motors. Of course, you've had to be very patient with this name in the past. It's only eroded wealth over the last couple of years. But do you think things are going to turn now? You think the worst is over?
It's very difficult to say the worst is over. Let's talk that at least the price correction might be getting to the bottom. But yes, it's a large company. It's operating in multiple geographies. So one needs again to have a thing that many geographies have to align. Once they align, then definitely there is an opportunity out there. But a large company operating in multiple geographies, yes, one needs to be patient. You have already said what I wanted to say.
Okay, okay. Well, the mid-caps have shown a fairly decent comeback after being, what, 15% down year to date. Now they are, I think, down 7% year to date. And for this month itself, the mid-cap index is up almost 4% compared to the Nifty, which is up less than 2%. So some outperformance has come. In that space, what would you want people to avoid? Because last time, some people got their figures burnt.
So in terms of avoiding, I'll not like to say that you avoid a particular sector or a particular company. What if one can do is to avoid overvaluation. Now this cannot get more basic than that. So when the mid-cap rally took place for last 1.5, 2 years, after in the wake of demonetization, so there were bubbles of overvaluation, and if you look to see, it is the overvalued mid-cap companies which really created a problem for the investors. So rather than drawing an overarching line that avoid a particular sector or a particular company, just go for a margin of safety. I mean, that's what the masters have told us. And repeatedly, that's one lesson which really helps the investors.
Sure.